Hello and good day, and how have you been? Hope you've had a lovely day all this while. Okay, we have a question on the board under the standard costing, and we are going to solve this question using a different method from the previous video I gave us. As we can see on the board, I have a format to guide us, or a format to help us and to put us through to answer a question of this nature. Moreover, we can use this same format to attempt any question under the standard costing. So, HST PLC presents the following data to you about operations for the year ended 31st August 2005. We have the actual budget, the actual cost, and the budgeted cost. So this is the material cost, labor cost, and overhead cost. We have the grand total and the units produced. The company estimated to consume 60,000 kilograms of raw materials, but 56,000 kilograms was actually consumed. The company estimated to pay labor at 2 naira per hour, but 2.50, which is 2 naira 50 kobo per hour, was actually paid. No ideal labor hour was recorded. So, to answer this question with this format I have on the board, first of all, you need to take note of something. Here you can see that the actual cost came in first before the budgeted cost. In some questions, or most questions, the budget comes before the actual. So you need to take note of that, take note of the headings before attempting any question. Secondly, this same word budgeted is used to represent the standard cost, likewise estimated. So when you see estimated in a question, it's actually talking about the standard cost. If you see the word budget there, it still refers to the standard cost, while the actual cost remains the actual cost. So let us answer this question. Now, this table format, we'll use this format to determine our standard cost and to determine our actual cost. So we have the quantity, the units produced, and the cost. We also have the quantity, the unit priced, and the cost. So what is the standard cost? Remember, we're dealing with material variance here, okay? Because the question says we should answer the material cost variance, material price variance, and the material usage variance. Then the labor cost variance, labor rate variance, and the labor efficiency variance. So this format I have on the board is to answer the material variance. When we get to labor variance, I'll also tell us the steps to take to answer the question. So, material costs. Every details we need, we'll get it from this section that has to do with the material cost. Because this is for material costs, this is for labor costs, and this is for the overhead cost. So, what is the standard quantity here? What is the standard price and the unit cost and the cost? Standard, we have 30,000 naira here as our standard cost. Okay, so we write 30,000 here. This value represents the standard cost. You can see under the material cost, we have actual cost 20,000 and the budgeted cost 30,000. So let's come down to the word. It says the company estimated to consume 60,000 kilograms of raw materials, but 56,000 was actually consumed. So it means that the standard quantity here is what? 60,000. So we have 60,000 as the quantity. You see, the company estimated, so this word estimated simply talks about the standard cost. The company estimated to consume 60,000 kilograms. So we have 60,000 under the quantity of raw materials, but 56,000 kilograms was actually consumed. So it means 56,000 kilograms will go on the actual cost. So here we have what? 56,000 kilograms, okay? This is the quantity, 56,000 kilograms. So let us continue reading. It says the company estimated to pay labor. So this has to do with labor. Right now we're dealing with material. So we're going to stop here. Let us get the value which we need on other ones. Meanwhile, since our standard cost is 30,000, it actually means that our actual cost is what? 20,000. So we have what? 20,000 here. Now, what is our unit produced? From the question, we see that the unit produced is what? 140 for the actual cost and 160 units for the budgeted cost. So, our units produced, the unit produced is what? For actual cost, it is 140 units. Okay, then for the standard cost is what? The units produced. Our units produced is what? 160,000 units. Now we can see that the units produced are of different values. So units produced under the standard cost is 160,000 units, and the units produced under the actual cost is 140,000. Now because these two units are different, there is this formula we are going to apply here, which is known as based on actual outputs. Based on actual outputs. So we have it this way: based on actual outputs. Based on actual outputs. Now, if the units produced are the same, then we don't need this format. We don't need this formula. But if they are different, then we need to make use of this in order to get the new standard cost, standard quantity, and standard price. So let us proceed. The formula for this is the standard quantity. Okay, this is standard now. Standard quantity. So we have what? The standard quantity will be divided, standard quantity will be divided by the standard units produced. Standard quantity divided by standard units produced. Okay, so we have what? Standard units produced. Okay, times the actual units produced. The actual units produced. Okay, take a look at it again. Standard quantity, this is the standard quantity, divided by the standard units produced times the actual units produced. So what is the standard quantity from the question? The standard quantity is what? 60,000. So we have 60,000 divided by the standard units produced. Standard units produced is what? 160,000. So we have what? 160,000 here times the actual units produced. Actual units produced 140,000. So by the time we punch our calculator, the value we have here is what? 52,500. 52,500. Now this 52,500 we have here now stands as the new quantity, the new standard quantity. Okay, so the new standard quantity is 52,500. So what we are going to apply is this. We'll bring this value to this place, 52,500. Now this value stands as our new standard quantity. Okay, then remember, our unit price. I made a mistake, please. Now we didn't determine our unit price before I proceed. Okay, now to determine our unit price, we'll say the 30,000 divided by 60,000. That will give us the value of our unit price here. Okay, 30,000 divided by 60,000. So once you do that, we get 0.5 here. Our unit price is what? 0.5. The same thing applies here. 20,000 divided by 56,000 kilogram. 20,000 divided by 56 kilogram. So it gives us what? 0.3571. Okay? 0.3571. Take note, not 60,000 divided by 30. No. It is 30,000 divided by 60,000 kilogram. 20,000 divided by 56. It gives you the value for the unit price. Now, with what we solved there, we derived at 52,500. So we brought down that same value here as our new standard quantity, which is 52,500. Now, this unit price we have comes down as well. So this is what? 0.5. Now, to determine our cost, we say 52,500 times, okay, 52,500 multiplied by 0.5, and it gives us what? 26,250. This value we have here, 26,250, now stands as our new standard cost, the new standard unit price and the new standard quantity. So to attempt this question or to answer this question, the material cost variance, material price variance, and the material usage variance, this is the particular value we are going to make use of once we come under the standard. So number one, material cost variance. What is the formula for the material cost variance? It is the standard cost minus the actual cost. So material cost variance is equal to what? Standard cost minus actual cost. Standard cost minus actual cost. What is our standard cost? The standard cost is what? 26,250 minus the actual cost. And what is the actual cost? We have what? 20,000 naira. 20,000 here. Okay? So 26,250 subtract from 20,000. Our final answer here is what? 6,250. 6,250 F. F means what? Favorable. Watch the first video on the standard costing, the introductory video. There you will have a better understanding why we make use of F as favorable and A as the adverse. So we'll proceed. 26,250 minus 20,000 gives us 6,250 favorable. So number two says the material price variance. Material price variance. And the formula for the material price variance is what? The actual quantity, then the standard price minus actual price. Take note of the formula. You must know this formula to answer any question under the standard cost. Okay? So, what is the actual quantity? Now, this is the section for actual, right? And the quantity is 56,000. So, we have what? 56,000. Then, in brackets, standard price. What is our standard price? Our standard unit price is what? 0.5 minus the actual price. And the actual price is 0.3571. Okay? So, we have what? 56,000. Please, this should be on the naira sign, okay? Take note of that. This is cost. We're dealing with cost. So, we have 56,000. Then, in brackets, 0.5 minus 0.3571. It gives us what? 0.1429. So in order to expand this bracket, we're going to multiply the two values we have. So 56,000 times 0.1429, it gives us what? 8,002.4 favorable. Okay? 0.4F favorable. And this is the answer for the second question. So we'll come over to the third one. The third one is what? The material usage variance. Material usage variance. Material usage variance. And for the material usage variance, the formula is what? The standard price. Then in brackets, we have what? The standard quantity minus the actual quantity. This is the formula, okay? So what is our standard price? The standard price, this is standard, and the price is what? 0.5. So we have 0.5. Then the standard quantity. And our standard quantity is what? 52,500. Subtract from what? The actual quantity. And the actual quantity is what? 56,000. Okay? So, we have what? 0.5. Also take note, please. This is the material price variance. So, you end with your naira sign, okay? Material price variance. This is the final answer. Material cost variance. This is the final answer. So, we have what? 0.5. Then in brackets, 52,500 minus 56,000 gives us minus 3,500. Minus 3,500. So by the time we multiply these two values, our material usage variance will be equal to minus 1750 adverse. 1750 adverse. Now you can see how easy it is to make use of this formula. So you need to understand the logic, because by the time you're able to convert and arrive to this, then solving the question won't be a challenge, as long as you know the formulas by heart. As long as you know the formula, you practice daily, you solve several questions, and you will definitely come out successful, because the questions will be very, very easy for you to attempt. So we'll have the same table format again. Now we're going to have what? The labor. This is going to be the labor hour, and this is going to be the labor rates. Labor rates. So take note of that. This is also the labor hour, and this is the labor rates. Labor rates. Then we'll have the cost as well. So the company estimates to pay labor at 2 naira per hour. Now, each time you see this word per hour under the labor, per hour, you take that particular value to the labor rate. Okay? So since it says the company estimated, it means it's going to be what? The standard labor rate. So the standard labor rate will be what? We'll have 2. Okay? We'll have 2 naira per hour. So let us proceed to the actual now. Now, if 2 naira per hour was the standard rate, it means that 2 naira 50 kobo per hour, it's now the actual rate, because it says, but 2.50 per hour was actually paid. So this is the actual, okay? 2.50. Now, let us proceed again. The labor cost. Now we're dealing with labor. We'll work with this margin. The labor cost, the actual labor cost is what? 40,000. This is for labor, right? So the cost is what? 40,000. While for the budgeted is what? 38. Okay? So we have been given these two values. How do we proceed? Then 38,000 divided by 2. 38,000 divided by 2. What do we have here? 19,000. So 19,000 stands as the labor hour. 19,000 stands as the labor hour. Then 40,000 divided by 2.50 gives us what? 16,000. Now, ensure you understand the concepts behind this. You divide this in such a way that by the time you multiply both your labor hour and your labor rate, it gives you the cost. By the time you multiply both the labor hour and the labor rate, it also gives you the cost. This is applicable both under the labor variance and the material variance. Okay? So, what is our unit produced? We have our unit produced. Unit produced under the standard as what? 160,000. Then the units produced here. Units produced under actual. This is actual. Units produced is what? 140 units. 140,000 units. So we can see there are differences between these two values. So it simply means we are going to work with this formula again, which says based on actual outputs. Based on actual outputs. So we are going to work with this format again. Now, the formula goes this way. The standard labor hour divided by the standard units produced times the actual labor hour. Sorry, the actual units produced. The same way we derived it when we saw for the material cost, it's what we are going to do here as well. So, standard labor hour. We say what? Standard labor hour. Please don't abbreviate in the exams, please. Standard labor hour divided by what? The standard units produced. So divide by the standard units produced. Okay? Standard units produced multiply by the actual units produced. Actual units produced. Okay? The standard labor hour divided by the standard units produced multiplied by the actual units produced. So what is the standard hour? The standard labor hour is what? We have 19,000 divided by the standard unit produced, and the standard unit produced is what? 160,000. Multiply by the actual unit produced, and the actual unit produced is what? 140,000. So by the time we punch our calculator, the final answer is what? 16,625. So this value now stands as our new standard labor hour. So we have what? 16,625. 16,625. So 2 comes down the same way we did under the material variance. So this labor rate comes down, then we'll multiply these two values. We'll multiply the two values. 16,625 multiplied by 2. That gives us what? 33,250. So once you are done with this, the next thing is to answer the question, and it makes it very, very easy for you to derive at the final answer. So the labor cost variance, just like the material cost variance, it is the same formula. The labor cost variance is the standard cost minus the actual cost. So labor cost variance is equal to standard cost minus actual cost. So what is our standard cost? Our standard cost is what? 33,250 minus the actual cost of what? 40,000. So 33,250 subtract or minus 40,000 gives us 6,750 adverse, equal to 6,750 adverse. You know the reason why we have it in adverse, right? Because it is a negative sign. So our labor cost variance is equal to 6,750 adverse. Number 2, we have what? The labor rate variance. Labor rate variance. Labor rate variance. And what is the formula for the labor rate variance? We have our actual hour, then the standard rate minus the actual rates. Okay? So what is the actual hour? The actual hour here is what? 16,000. We have 16,000. Then in brackets, our standard rate. And our standard rate is what? 2 minus the actual rate. And the actual rate is what? 2.50. Okay? So 16,000 comes down again. Then in brackets, 2 minus 2.50 gives us minus 0.5. So to open this bracket, we need to multiply. Okay? So by the time we multiply, our labor rate variance will be equal to what? 16,000 times minus 0.5. It gives us what? 8,000 adverse. 8,000 adverse. So that is the value for our labor rate variance. Then we'll come over to the last one, number 3, which is what? The labor efficiency variance. Labor efficiency . So we'll come over to the next question, which is the labor efficiency variance. And the labor efficiency variance is the standard rate minus the standard hour minus the actual hour. Okay? What is our standard rate? Our standard rate is what? 16,000. The standard rate is 2. Then the standard hour, this is standard, and the hour is what? 16,625 minus the actual hour. And the actual hour is what? Actual hour is 16,000. 16,000. So we have what? 2 in brackets. 16,625 minus 16,000 gives us what? 1,000. Gives us what? 625. 625. Okay? So 2 times 625, our labor efficiency variance is equal to what? 1,250 favorable. So this stands as the final answer. The labor efficiency variance is 1,250 favorable. So, my good friends, this is the best way to answer any question under the standard costing. But there are things you need to be aware of. First of all, you must be able to interpret any question that is being given to you. Understand the question, read and understand it very well before you proceed to these steps. Once you are done with this, then getting your final answer won't be a challenge to you. So I will advise you to still watch the first video, the introductory video on the standard costing, to get a better understanding about the standard costing. Also visit our website to read regularly. So if you love what we do, share this video, like this video, subscribe to our channel, and invite more friends, because we have a lot of videos for you. Do have a good day. Goodbye.